Your only risk would be your insurance and interest costs, which are partly tax deductible. Sounds too good to be true, but most people don't know about these things. If you have certainty, you know you can go into the market in a big way, but you know you're protected on the downside, who would be more confident about taking action? Of course, because you can actually take advantage of these things and protect your downside. Okay, so there's so many different things out there. We could go on for days teaching you different strategies, okay? But for this session, we only had 3 hours, which we're just about up. Making sense? Okay, so there's a lot of things that you can do there. Let me go through a quick property strategy with you. Then I'll tell you, if you're not a member, how you can be a member if you want to go and learn all these things in depth. And then we'll do a members only session so we can get into some of the nitty gritty of what's happening in the market and things like that. How's that sound? Okay, so I'll just go through this quickly on the PowerPoint. Here's one strategy, how to make $35,000 per year tax-free. No doubt there's people in the room who would like to make some money tax-free legally. This is a real estate strategy. So the share market strategy is instant cash flow, okay? The property strategy are more longer-term strategies. People say, what should I do first, or what should I do? My bottom line message is do something is better than nothing, okay? Be strategic, be intelligent, practice on paper first, and stagger your way in. So don't be foolish. Bit by bit, build up your confidence and away you go. The worst thing you can do is do absolutely nothing, to be paralyzed by fear and see life slip by and go, I missed out on the opportunity. That's the worst thing. Do something. Even if you make a mistake, if you're doing it in a small way, okay, you're going to have the chance to learn from your mistakes. And actually making mistakes, you as an investor, you've got to accept that sometimes you're going to lose. And the question is, can you handle losing? Because if you can't handle losing and you're afraid, I'm not going to do anything because I'm afraid of losing, guess what? You'll lose big time in life. Because it'll slip you by and you go, if I coulda, shoulda, woulda, it's gone. Okay, so let's look at this as a one property strategy. You can do many, but this is what I started many years ago as a property strategy. Let's use the example of just buying only 2 properties. And what if you could do this? Imagine you could borrow money you never had to pay back. Who would like to borrow money you never have to pay back? Okay? So you're saying, I have family members that did that to me. They borrowed money, never paid back. So year one, let's say this is a 10-year plan, starting now. Now, some of you are members who started this many years ago and you've outperformed this. So 10-year plan, you buy a property, let's say 300,000 is just a figure, whatever it's going to be, whatever, okay? You buy year one. Year 2, you say you can't afford another property, you've got to wait. And year 3, you're able, with help with finance, etc., you're able to get a second property, okay? So what's going to happen? Well, 10 years later, let's say these properties have doubled in value. Okay, no guarantee of that, but if you look back the last 10 years, that's happened 10 years before that, then the first property is now worth 600,000. And 10 years later, after year 3, that second property is now grown, it's worth 600,000. So you now have a property portfolio outside your house worth $1.2 million, okay? So what are your options? One, if you want to retire, you can sell some of those properties, true? You could cash them in, you made $600,000 profit before tax. But if you sell them, what sort of tax are you going to pay? You'll pay capital gains tax. Unless, of course, you're a Kiwi, okay, and you live in New Zealand, they don't have to pay capital gains tax, okay? Do you realise that? It's not fair, is it? Speak to Mr. Rudd. Yeah, well, possibly, yeah. But in New Zealand, it certainly has been a great property market up until recently. I think you're going into recession over there and at this point in time, and your property market's struggling a little bit. But no capital gains tax. Guess what? Do they have to pay stamp duty in New Zealand? No. It's just simply not fair, is it? Okay. In Australia, we love with capital gains tax and stamp duty. Over there, Kiwis get off scot-free. So the point is here, we have to pay those things, but if you sell, you pay capital gains tax. If you never sell, you never have to pay it. You'll still pay the stamp duty when you buy it, which I don't think is fair. That's why I also love the share strategy too. $1 million or $2 million or $3 million in the share market, stamp duty, am I paying it? If you buy a $3 million property, you're paying a lot of stamp duty in cash. In that, no, you can liquidate instantly. So sometimes, there's benefits both ways. So you could keep these properties though, let's not sell them. And what you could do, you get a line of credit on the properties, which you do before you quit your job, and you could draw out, let's say you draw out $3,000 a month. $3,000 a month, $35,000, $36,000 a year. Every month you're going to draw out of your line of credit out of these properties. Make sense? And you're going to use this to supplement your retirement income rather than sell the properties, because if you sell the properties, you're locking in your gain, but you're going to miss out on the future growth. What you're going to do is say, instead of selling, you actually draw out your profit, say $3,000 a month, as an example. You're drawing it out. Are you allowed to do that? Yes or no? The bank doesn't care what you spend this money on. Okay? Tell them whatever. They don't even check. What are you going to do with the money? Okay? They don't even check. I don't know why they ask for that. They don't care as long as you meet the repayments. Okay? Now, do you have to pay taxes $35,000 or $36,000 a year you're drawing out, the $3,000 a month thereabouts? Do you have to pay tax on that money? Yes or no? No, it's actually tax-free in a sense because it's not income. So you're not paying income tax. So you're drawing out your profits effectively. So is that a good thing? Yes or no? Very good thing. Do you have to pay the money back? Well, that depends, okay? Imagine if you could borrow money, hundreds of thousands of dollars, it can make you rich if it's accurately invested, and you never ever have to pay it back. That certainly sounds too good to be true. But is it possible to get access to money like that? The answer is actually yes. Can you get interest-only loans for investment property? Yes or no? Yes. The answer is yes. Interest-only, for those not familiar with, interest-only means you pay what only? Interest only. Therefore, you're not paying the principal. You don't actually have to pay the principal back. Like an interest-only loan over time, you can extend it into extended interest-only loan. So you're paying the interest only back. You have to pay the interest, but you don't have to pay the principal back. But Jamie, what if eventually I die? Who cares? It's not your problem. It's your children's problem. That'll teach the little buggers waiting till you die to inherit all your money. Aren't they going to you'll be in your grave laughing, okay? Take that. Fight over the debt, shall you? So no, you can actually have debt cover. You can insure, you should be getting proper insurance as an investor. We can help you with that. So take care of your insurance. So you can get debt cover. So what would happen when you die, the properties would be sold or kept or whatever, you can have debt cover that can pay out your debt. Repeat after me. Something to think about. Now think about this. Who owns insurance companies? Who owns them? Besides the US government now. Who owns them? Banks. So think about this. The banks have loaned you money that you're not intending to pay back, okay, as long as you have to meet the interest repayments. And then you go out and take insurance from insurance companies going to pay out your debt when you die, which they own anyhow. So they're going to basically pay themselves out. So you're effectively taking advantage of the banks. So if you're going to do this strategy, you have to be comfortable with that. Just a show of hands. Who's comfortable in this room about taking advantage of the banks? Okay, motion carried. So, in other words, you have effectively, but Jamie, what about if I'm drawing out the money, isn't that over time increasing my interest payments? True. But over 10 years, what happens to rental prices? Do they increase? Have they increased in the last 10 years? Are they increasing a lot in Australia right now? There's a rental boom, increasing a lot and have been. So you do have increased rent. If you didn't want to have to use your own money to pay it back, could you use some of the line of credit to meet the repayments? Yes or no? You actually could. You could be a lot more credit. Could you use a strategy you've learned today with some of your money, instead of pulling the money out to spend and live on? Could you pull the money out of these properties and invest it into the share market? Yes or no? You could do that. And maybe just to rent out some shares. So instead of actually spending the money, you could pull it out, rent out some shares, get extra cash flow. So now you've made money out of thin air out of your properties. You pulled it out, you've reinvested in the share market to rent them out. So now you're making money on money that you made while you slept, and then you got the cash coming into your pocket. And eventually now you're going to say, will I spend it? And some of you go, I'm not going to spend it yet because I just want to be really certain. So you might then go and buy more properties with it and accelerate this. And as it creates more. But eventually what's going to have to happen? One or two things. You're going to what? Die, or you're going to have to spend it. And it's best to spend it before you die. Okay, now, some people don't do that. They're like going to take it all to their grave. We've got to get to some point where we go, you know what? The point of making money is to have a lifestyle. There's no point having all this money on paper. I'm not going to spend it.